This seems to have been a quite obvious omission. RaveDao has rallied massively in the last week, and the question is, how much longer can this rally last? Who's buying here? Who's selling here? Let's have a look at the on-chain data, the data most people are not considering. Try to figure out how we can time RaveDao. The token climbed into the top 100 cryptocurrencies in terms of market cap. It appreciated by almost 6,000% in a week. And that's then the resulting chart. It's pretty much a hockey stick. We are now close to $16. And 2 weeks ago, we were at 25 cents. Now on Ethereum, there are 11,000 holders. On the base chain, there are 12,000 holders. And on the Binance Smart Chain, there are 27,000 holders. It is interesting to look at the number of holders over time. Now this is Ethereum. On the left side, we've got the number of wallets with at least 60 RaveDao tokens. That's roughly $1,000 worth of the token. In the middle, that's $10,000. On the right, that's $100,000. Isn't it interesting that with the recent rally, the number of holders on the Ethereum chain went down, and that's across the board. That's true for small retail, that's true for the whale wallets. Now that's on Ethereum. Here is the base chain, the same picture, and here is the Binance Smart Chain. Again, the same picture, at least for the whales. Yes, a few small retail investors might be buying. Now how does this make sense when the price goes parabolic, but at the same time, the number of investors is going down? Shouldn't it be the other way around, that when there's more and more investors into an asset, that then the price rises? What I think happened here is that a central player bought up all of the supply. Have a look at the Gini distribution score on Etherscan. It's very close to 1. The whale concentration is 99.99%. So 0.22% of holders own pretty much all of the supply. The top 5 holders hold 96%. The top 10 holders hold 99% of the supply. And so really the on-chain metrics don't matter that much anymore. Have a look at the trading volume on the spot market in the last 24 hours. We've got 93 million worth of trading volume on Coinbase, but compare this with the perpetual futures market. Here we had 4 billion, and that's both on Binance and on OKX. The trading volume on the perps is much higher, so the trading volume for the bets on the price. So those two markets work fundamentally different. There's a spot market, just demand and supply. People are buying and selling the asset. And then there's the perpetual futures, so that's the bets on the price. If there are much more bets on the price than there's actual spot trading volume, that means that the bets can get manipulated. Now I like to make this example. Let's say there's a soccer game and you're the sports betting house and you allow people to bet on either team A or team B winning. Now this seems all harmless unless you as a sports betting house have now a vested interest on the outcome of the game. So let's say everybody, all the retail investors, all the people, they are betting on team A winning. And in order to balance out the odds somewhat, you as a sports betting house bet on team B winning. Now, you might get some risk exposure as a sports betting house, but it becomes problematic if you now can also impact the outcome of the game. If you bribe the referee. That's essentially what's going on here. The referee is very easily bought just with 93 million worth of trading volume, while billions over billions get moved and potentially liquidated via the bets on the price. And this isn't just theory, this is actually practically what's going on here. Have a look at the funding rate of RaveDao over time. Funding rate is extremely negative and the price went up. In other words, there were more people that were betting on falling prices than on rising prices. And then the sports betting house buys up the token on the spot market, pushing the price higher. And so the trading volume goes bonkers on the perpetual futures and the short liquidations go rampant. It started with 6 million of liquidations, then it became 9, then again 9, then 30, and again 30, and yesterday it was 20 million worth of short liquidations. So this is a very profitable game. The retail investors are all betting on falling prices, and then a few people that bought up all the supply, they can move the market massively. So really what matters is the liquid supply, and if 99% of the supply is just held by a few wallets, it doesn't take much money in order to move the market cap. But why am I making a video now about RaveDao? Why didn't I talk about this earlier? The reason is that something has changed. Check out the open interest. The price of RaveDao continued to rise, but the open interest now gradually is coming down. So it becomes less and less profitable to push the price higher. A lot of people already got wrecked and they don't touch RaveDao anymore. Now there is positive correlation between the price and open interest. If there is continued less interest in RaveDao over time, then the market makers will manipulate it less and less, and then the price will come down again. We had a very similar situation with Siren recently. Siren reached a market cap of 1.75 billion. And I've covered that token throughout its volatility. Feel free to check out those older videos. RaveDao has already reached $4 billion. The question is, how high do those market caps usually go when manipulation like this happens? Let's have a look at Bonk. Bonk peaked at 4 billion. Let's have a look at Pudgy Penguins. That peaked at around 2.7 billion. Here is Dog with Head. That peaked also close to 4 billion. Here is Fartcoin. That peaked at around 2 billion. And here is Peanut the Squirrel. That peaked at around 1.75 billion. So it seems like most of those short squeezes, they tend to turn around somewhere between 2 and 4 billion. And that's the reason why RaveDao is now interesting. That's the reason why it finally might make sense to actually jump into the action as well. The open interest is coming down, there's less and less manipulation happening, and we have pretty much reached the ceiling in terms of how much manipulation can happen on a token like this. RaveDao is not going to hit 10 billion or 20 billion in market cap. It will turn around earlier than that. Now, I don't have a crystal ball either, but it's simply what historically happened in similar situations. The spot holders have already exited the token, and the manipulation is very likely going to move to another token very soon. Otherwise, open interest wouldn't be shrinking, and that's just the way how crypto goes. At some point, things turn around, and 4 billion is a very likely turnaround point. If you got some value out of this video, feel free to give it a like. It helps the channel grow. Feel free to also subscribe. I publish videos regularly. If you want to know my trades in real time, then feel free to also check out the premium membership that pops up over here. Thanks for watching. See you next time. Cheers.